What is going on, investors? Hopefully, guys are doing well out there. It is Friday. It's Super Bowl weekend time. It's also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we've got a lot of news. Better not waste any more time. Kick things off like we always do with Meta Platforms. So the week at 465.22, up just fractionally to finish the week at 468.11. Meta is not going to recommend or go out of their way to proactively recommend political content on Instagram and Thread. I tell you what, I wish they would just make this a feature, right? Instead of Meta making this decision. Because what if I'm a user out there and I don't necessarily want to follow Donald Trump or Joe Biden or the media that covers both of those candidates? But what if I do want to still get fed the news that's happening geopolitically or here domestically in the United States? I wish there was just a button. Well, now Meta is going to just essentially make that decision for you, not recommend political content. I think this is a gap in social media where they obviously want to proactively feed us some content, some viral content. Us as users should have a decision in that for the most part. Moving on to Apple, start of the week at 186.39. iPhone giant up 1.3%. Finished the week at 188.85. Now, Apple Vision Pro early appeal is surprising. That's according to Webbush. Now, I think what we're seeing early with the Vision Pro is, first of all, you have influencers that they're able to get their hands on this. If you have a decent YouTube following or social media following, you probably can offset the entire price of one of these Apple Vision Pros. You obviously have all the early adopters, and most of the early adopters of technology like this are going to probably be pretty popular on social media or be proactive on that service. I think this is all in the context of a $2.9 trillion company with products that absolutely sell off like hotcakes, including the iPhone, the iPad, and the Macintosh computers, and the earbuds or the AirPods. We're talking about a device that is still relatively expensive, and I will say this again, that your mom has to buy the device that Apple makes for it to move the needle over at the company. Your mom will probably buy a watch, will buy the phone, will buy an iPad, maybe buy the headphones, and will probably subscribe to a few of the Apple services. I don't really see a lot of moms out there, at least in the current form factor. This will obviously evolve over time, but in the current form factor at over $4,000, your mom's pretty hip if she's buying a Vision Pro. Now, Apple's iPad shipments fall after no new launches in 2023. What were you doing, Apple? They haven't launched a new iPad or iPad Pro since 2022, iPad Air since March of last year, and the iPad Mini hasn't been updated since September 2021. We certainly saw this when we did Apple's earnings video maybe 2 weeks ago. iPad shipments fell off of a cliff, and so certainly an opportunity for Apple to maybe do a little bit of a refresh on there, maybe drive some new sales. Apple said to be working on a foldable iPhone. I was in Google last week, and I was at Google's headquarters, and they have kind of like a shop where you can kind of come in there and see a lot of their products. And just admittedly, just being an Apple guy myself, I haven't even seen or been up close and personal to a Google phone, and they have that one that folds out, and I just wanted to see it. I haven't actually held and used a foldable phone in my lifetime, and I can certainly see there's some challenges there from a durability perspective. Also, like just like lint or like dirt or just stuff getting in the small crease that's created when you do that kind of foldable thing. But it wouldn't surprise me if Apple moves into this arena. Certainly companies capable of pulling off the technology, since the screen and the technology has more or less already been developed, and we'll see if Apple moves in that direction. Moving on to Amazon, start of the week at 169, up 3.2%, finished the week close to $175 per share. Pinterest has inked a deal and has had a deal actually with Amazon for a little while to roll ads. So if you're on Pinterest and you're scrolling through, there's a fair amount of ads that actually lead you directly to Amazon. And many think that this is working out really well, probably for both companies, because a lot of Pinterest ad load is actually going to Amazon. And so what's that showing me is Amazon's on the other end saying, no, Pinterest, send me as much traffic as you possibly can. Could be that Google gets into the mix as well for some traffic, but my guess is the Amazon conversion ratio is just so high that Amazon is able to pay a little bit more than maybe other advertisers. In a clean, and we'll put clean in air quotes, in a clean regulatory environment, Amazon would actually like to probably buy a website like Pinterest or an app like Pinterest, which I think at the current time is averaging about a $30 billion valuation. I could totally see Amazon buying Pinterest, rolling that up into their technology, and certainly being a very viable traffic source for the company. Obviously, in the current regulatory environment under President Joe Biden, something like that would almost assuredly not happen. Now, the door opens a little bit as if we roll into November, you get I'm assuming it's going to be former President Trump or Joe Biden as the next president, although they're both, they both have their drawbacks, if you will. And so who knows, a lot can happen between now and November, I guess. But let's assume President Trump takes the office. Then it will be, Trump's not your traditional like deregulation Republican. And I don't even know if a lot of those exist anymore, but it will all depend on who he appoints to the chair of the FTC. If he appoints someone who's kind of deregulation but anti-big tech, then that will pose some problems. But if he appoints someone who's straight, hands off from a regulatory perspective, well then, oh my goodness, 2025 could be the year of like roll up M&A, and we'll see what happens there. More job cuts in Amazon with healthcare divisions hitting layoffs. So Amazon has acquired Amazon Pharmacy, which I think was PillPack, and they also acquired One Medical. That was last year. It was actually a public company for about $18 per share. I think what we're seeing here is the company is finding synergies probably at the management level. And in that case, you don't necessarily need as many employees. And we're just seeing across the board with Amazon, and obviously we feel for the people that lose their jobs, right? But Amazon's doing a really nice job at controlling costs right from the jump. Even though the company is probably more profitable than it's ever been, it's continuing to make those cuts. And as a shareholder, you certainly appreciate it. Obviously, as an employee of Amazon, might make you a little nervous. Now, Amazon accused of luring shoppers to buy more expensive items. The headline's a little misleading, but the accusation is probably true. As somebody who has sold on Amazon as a, quote, third-party seller. So on Amazon, you have essentially first-party sales, which are Amazon buying the items, storing them, and shipping them. Then you have third-party sellers. And oftentimes, as a third-party seller, you still have Amazon store and pick, pack, and ship your items. That's what's referred to as Amazon FBA. That's a lot of the items that are inside of the warehouses. Now, there are also third-party sellers that choose to ship their items out of their own home, out of their own basement, out of their own storage facility, or their own warehouses as well. Amazon it's long been known in the Amazon seller community that Amazon favors the, quote, buy box to Amazon sellers that are using their FBA. Oftentimes, the price that you see published, like the add to cart or buy now button on Amazon, it's not always the lowest. If you actually go in there and see other sellers, there's actually going to be a lower price oftentimes, but you might have to wait an extra 2 days for shipping or something like that. And Amazon likes to favor the sellers that use their services, considering Amazon makes more money. Now, Amazon's setting to get an NFL playoff game next year. Obviously, that happened this year when you had the Miami Dolphins take on the Kansas City Chiefs. That game was streamed exclusively on Peacock. I know a lot of people kind of complained about it. There was a lot of kind of scuttlebutt about it online and just a lot of discussion. At the end of the day, it was probably a big boom for Peacock subscribers. I think Amazon did something, maybe it was savvy, maybe it was just luck, but Amazon probably realized this might get some blowback from NFL fans and maybe people online. Amazon actually passed on the opportunity. That's why Peacock aired that game. Now, next year, I think consumers and fans of the NFL, they'll probably be less likely to complain about this. And so the game, which Amazon has the absolute right to, unless, again, they defer the right to another network, Amazon probably going to get a playoff game next year. And that was actually a really key game in the playoffs. The Dolphins and the Chiefs, obviously the Chiefs being in the Super Bowl and the Dolphins being one of the best teams. That was actually one of the most exciting games to watch, although I think it ended up being more or less a blowout. Moving on to Netflix start of the week, we'll call that 574, slipping down 2.22%, finished the week at 561 and some change. Fubo and other streamers took a dump this week as ESPN, Fox, and Warner, which owns TNT, which has some exclusive rights to the NBA and also college basketball, they've all teamed up and they're going to create a sports streaming app. So this was really interesting. And I'm sure you guys have already heard this. There's obviously the angle if you're Fubo or certainly like maybe even YouTube TV, probably to a lesser degree, certainly traditional cable as well, probably not liking this back. I'm going to just tell you what I think is happening here. I think ESPN, Fox, and Warner, they want to get out of the live sports business. Okay, ESPN, which is owned by Disney has been shopping ESPN to the leagues, to other big tech companies like Google and Apple, which probably feel like maybe they could buy it, but maybe from a regulatory perspective, it doesn't happen. Fox and Warner also probably in a similar boat financially. I think what they decided to do was actually probably something rather intelligent. They decided to all combine forces into one streaming app. And then if you get a little bit on the deregulation side, or you get a tech company out there that, feeling good about an acquisition, well, now, instead of buying ESPN and having to compete against Fox and Warner, you can just buy the whole thing. Or they can take this and send it to the leagues, the NBA, the NFL, and maybe have strategic investments made there. One of those two things. I don't think they're doing this because they're in the sports business for the long haul. I think they're doing this because they actually want to unload this, and combining forces might make it easier to sell. Now, moving on to NVIDIA. Does NVIDIA stock ever go down? I mean, the stock started the week at 686, 5% on there's some news for NVIDIA this week, but it's nothing really big. Up to $721 per share. NVIDIA just continuing to soar. Now, the company, this actually is pretty big news. They planned to set up a new unit to capture the $30 billion custom chip market. Currently, the custom chip market is dominated by Broadcom. You have Marvell. You have, obviously, AMD. There's a couple of companies that are actually private that are making pretty cool custom chips as well. Google, Apple, obviously making some of their own chips as well, often in partnerships with either ARM Holding or Broadcom. Meta's getting in the game of custom chips. And so NVIDIA, instead of making just strictly off-the-shelf H100, A100 chips, well, they're going to make some custom ones as well. A great market for NVIDIA. Personally, I think the future or a large portion of the future, especially on the high-end chip, not necessarily your computer chip or your smartphone chip, but on the really, really high-end, a lot of that is going to be custom, and NVIDIA getting into that business, probably good thing. ARM Holdings jumped 58% in a day after the company reported earnings. ARM Holdings is essentially a licensing company that licenses chips designs to companies like Apple, NVIDIA, and others. And look, initially I wasn't really completely sold on this stock, and initially it was the right thing to do. But boy, this stock has caught a bid. I heard an interview on Bloomberg with the company's CEO. I'm going to have to go and reevaluate this one. It still hasn't been about 6 months since the IPO, which is kind of the length of time I like to take before I want to really consider buying shares of a company. Also, what I think is SoftBank still owns a huge percentage of ARM's holdings. So I got to expect that SoftBank is probably going to come back to the table, do a secondary offering. It's not your traditional secondary offering where the money would go to ARM. It'll be a secondary kind of offering where ARM will just sell more of their position of ARM, or SoftBank will sell more of its ARM shares. And that could create a liquidity event that pushes shares of ARM down. That could be your buying opportunity. We'll take a closer look at that stock in the months ahead. Now, chip stock rose this week. When are they not rising? But as President Joe Biden unveiled $5 billion CHIP Act plan to establish a headquarters for National Semiconductor Technology Center. I tell you what, all the criticism that Mr. Biden sometimes takes, and every president takes criticism, I think the stuff that he's done around semiconductor, look, I think this company wastes money in so many different ways, particularly when it goes outside of the borders of the United States. I'm sure there's leakage and there's stuff about this CHIPS Act that's being, quote, wasteful from a spending perspective, but at least we're spending it here and it's benefiting the tech community and it's benefiting the manufacturing of computer chips, which is a very specialized business. And if we can make a lot of those here in the United States, I think that would be a good thing. Now, Taiwan Semiconductor and Sony and others are teaming up to build a second chip fab in Japan. This is going to focus on 12-inch wafers. They're going to do about 100,000 of a month. And it's going to be kind of on your, I would call this probably your trailing edge, certainly these larger nanometer processes, kind of your trailing edge, but you get down to 6-7 nanometer. That's not quite the bleeding edge, but certainly leading edge processors. Very cool. I think, I think in 4 or 5 years, and that might even be overstating it, you're going to have major chip fabs here in the United States. Obviously, there's some in Japan. There's others elsewhere around the world. But I think the reliance on Taiwan probably goes down a little bit. And that fear factor of an invasion there certainly gets scaled back just a little bit. Now, speaking of scaling back, Huawei Mall's scaling back its phone production as AI chip demand soars. I think this is maybe one of the most underrated headlines of the week. The company makes a flagship Mate 60 phone, and by all accounts, they're actually selling pretty well, not here in the United States, but they sell well in China. But they might stop making that device because AI chips are selling even better than that. Think this is incredibly bullish, probably for Huawei, but also for NVIDIA, AMD, and pretty much everyone else in the AI industry. Moving on to Google, start of the week at 144 and some change, up nearly 3%. Finished the week at 149, a little 49 there for the 49ers. Google Alphabet located just 30 minutes or so away from where the 49ers play. Now, Google rebrands its AI chatbot as Gemini with a new subscription model. Love what Google did here, okay? I think the Gemini name, just from a branding perspective, way better than Bard. I mean, Bard totally sounds like the geeks at Google came up with that. Gemini is kind of hip and cool, and I really like it. Now, it's $20 a month. I don't yet have a subscription to it, but I'll sign up for it, and I'll test it out and see what happens. I think what will be very interesting to see is if Google creates like, I know, so like Amazon has Amazon Prime. And if I subscribe to Amazon Prime, obviously I get benefits on Amazon.com from a shopping perspective, but I also get access to Amazon Prime Video and some other stuff. I think Google needs its own Prime, and maybe they call it Gemini. I don't know. But for Google, I subscribe to YouTube to not have to watch the ads. I also have YouTube TV, which is my primary, basically like my cable subscription. I'm probably going to whip out my credit card and pay them $20 a month here. Some of you might pay for premium access to Gmail and other things. I think it'd be really cool if they roll this up. Also, Google sells obviously its own phones. It'd be really interesting if they have their own package there where if I buy the Google phone, then I get free access to some of this stuff. Like if I have a Google phone, should I really have to watch ads on YouTube, or could that be a perk of me buying the phone? I think these subscription models will be very interesting. Obviously, Google makes the vast majority of their money on advertising. Well, can they be like Apple in some cases and start this, quote, service business? That would be very interesting if Google's able to do that, and that could drive huge margins and money into Google. Speaking of other business models, the company has this G Fiber business, which is essentially fiber internet. Now, I have it here at my home, and it's AT&T, and it is very expensive. I think I pay like $190. It might be even more than that. I'm almost embarrassed to say this. I pay almost $200 a month for internet. So when I do talk down to people that can't afford $35,000 cars, just understand that I'm vastly overpaying for my internet. But it's a very competitive business. You got Verizon in here. You also have kind of the new satellite, the SpaceX and the Starlink service, which I know people that have that service. They're very, very happy with that. I only see downward pricing pressure on here. But again, maybe Google comes up with something where if you have Google Fiber, then you get access to Gemini and YouTube TV and all this other stuff. That could be in the cards. Now, moving on to Microsoft. Start of the week at call that 410. And the company put 2.58% in its pipe and smoked it up to $420.55 per share over at Microsoft. Now, I had to double check this headline because it says OpenAI's Sam Altman is eyeing raising up to $7 trillion. I was like, certainly Seeking Alpha had one of their moments where they put the T instead of the B. This has to be $7 billion to boost the global AI chip infrastructure. No, Sam Altman is thinking he can raise $5 to $7 trillion. Now, to just give you a sense of how much money that is, Microsoft, the company that he essentially works for, is worth a shade over $3 trillion. Apple is worth a shade over $3 trillion. So he's trying to raise more money than what it would cost to buy Microsoft and Apple at virtually no premium at today's market price. This guy is certified insane, but I absolutely love it. But this is actually also a very sneaky headline because it goes along with kind of the Huawei headline where they're shutting down production of their phone because they're going gangbusters on AI. Sam Altman's going gangbusters on AI because it's going gangbusters. And it's just like, I still think, even though NVIDIA stock, which we'll see from a technical perspective here in a moment, I think we're still very early in this explosion. Now, speaking of explosions, moving on to Tesla, start of the week at 182.89. Boom, this stock's skyrocketing up 5.8%, finding a little bit of technical support. We'll see that on the chart as well. Tesla finished the week at 193.57, helping the stock. Could be, in fact, the company is looking to lay off some employees. An internal letter went around to managers that were basically asked to make a binary decision. Is this person worth keeping? Yes or no? Now, Tesla did this, I think it was about 2 years ago, kind of before a lot of the big tech companies had their rounds of layoffs, and Tesla looking to get more efficient as well. Moving over to technical segment of the show. S&P 500 looking beautiful, way overextended from a rally perspective. We're way to the top of the channel. We're over and above all-time highs. Although when you get to over and above all-time highs, this is when retail sometimes piles in. They pile in up at these tops. Depending on how high retail comes in will obviously depend on how big of a pullback. You go really high, maybe the back test might only be to the highs. What I'm looking for is hopefully some kind of reversal. Negative news, negative sentiments. You get that negative news, negative sentiment. I mean, you really are buying heavily anywhere south of 4,700 on the S&P 500. Moving on to Meta, we've gapped and we're hanging out up here. This big gap in the chart is above all-time highs. You have to. I wouldn't chase Meta here. Okay, I just wouldn't chase it. No reason to. This gap should likely fill. The gap fills, that's your signal. Not to go all in, not to buy every share of Meta you ever wanted to buy, but that's your move if you want to add to a position, start a position. The gap fills, retest the highs back at 380, 390. That's your move. Moving on to Apple, looking pretty good, but we've actually consolidated. We're starting to go sideways. Eventually we can kind of put the sideways channels on Apple as it's trended between about 167, that was back in April of last year, up to about 200. You got about a $30 trading range on Apple until you break up well above that or break down below. You got to assume it's staying in that trading range. Amazon also gapped up after earnings, moving to the top of the range. This one's got a little more airspace before you'd really think the sellers, like maybe Jeff Bezos and his beautiful young lady that he's dating, might step in, or maybe they're married or getting married. I don't know. But this one looks like destiny to retest the highs back up here at 189. You retest the highs, you should get rejected. That'll be your opportunity to buy Amazon. Moving on to Netflix, looking very meta-like. The fact that it gapped up has held that opportunity. I mean, you're just waiting for pullbacks on all this stock. Speaking of pullbacks, NVIDIA does have pullbacks every once in a while. And I would assume one will show up eventually here based on that technical pattern where you run a line across the highs. I tell you what, NVIDIA could run all the way up. I mean, I can't even see it on the chart. It's so freaking high. It's like up here at probably darn near $1,000 per share. There's just nobody that wants to sell NVIDIA. It could be overvalued. It could, all the technicals could tell you to sell, but like nobody wants to sell. And like I said, we looked at the headlines, the Huawei headline, the Sam Altman headline, like the AI industry, like it's just getting started. Google made a beautiful reversal after coming back into the channel. It got about halfway. And we actually talked about this. Something we talk about a fair amount is the reason why I have this brown line here with Google is I like to buy on the middle of the channel because you see what happened with Google. Now, you would have had to pick this up intraday. It would have been very, very hard to get your shares and get your fill. But just keep this in mind. When a stock like Google, and almost all these stocks are in uptrends outside of Tesla, when they're in these uptrends, dissect the middle of them. And that's when you get in there and you make your initial buy. You don't have to buy all the shares you've ever wanted, but that's where you make your initial buy because as Google proved, you come back into the channel. That is one of the first places where you find support, and boom, Google's back off the races. Look like next week. This one wants to retest probably 155. Moving on to Microsoft. Just looks absolutely beautiful. You're waiting for pullbacks on Microsoft. Any pullback, very similar to NVIDIA. And a pullback could be like, like 3%. And yeah, you're probably buying it. Now, Tesla, from a technical perspective, made a very nice bounce off an area you kind of hope it would bounce off of. Now, it's not out of the woods yet. Everybody that watched my PayPal video knows that this pattern that we're in with lower highs, lower lows, this is intact until Tesla stock breaks above this cluster of highs right here at 245. So what that does mean is in the shorter term, we could bounce from where we were last week down here at like 170. Now we're at 190. We could still have a long ways to run with Tesla back to the 230s, and then we get rejected there, similar to PayPal, likely on our way to make another lower low. Shorter term, you can play these bounces off the downtrend. You can do it with Tesla, you can do it with PayPal, but what I found is most people that tune into these channels, you're more long-term focused. You're more buy the dip for the long term. If you're going to buy the dip on Tesla, I would not do it until you close above the kind of 255 region. You get above this region. That doesn't mean I buy at that area. I wait for the secondary pullback, the back test probably coming back into the 230s. That's where I buy it. And some of you guys are saying the stock's at 190 and you're recommending buying it at 230, but not at 190. I know that makes a lot of sense. But this is why the vast majority of retail people and the vast majority of people that get advice on YouTube, you don't make money because what I described to you is actually a professional strategy. And this is what professional money managers actually do. They wait for confirmation and then you move in, because if Tesla can close above the previous highs, guess what we're about to do? We're about to start a new uptrend. And yes, we can buy it comfortably here at 220 because chances are we are going to retest back up at 300 and we're going to start on that type of formation. But you have to wait because there's actually a much higher probability Tesla makes a new lower low and you got opportunities to buy this thing way, way, way lower. So just be patient. Don't have FOMO. And look, if you miss your opportunity with Tesla, there's AI stocks, there's all kinds of stocks, there's other stocks that are going to go public this year and over the next course of your lifetime. There'll be plenty of chances to make money. You don't have to catch every opportunity when it happens. Hopefully, guys, enjoyed today's video. Enjoy the Super Bowl. Go 49ers, even though I'm a Bengals fan. Yeah, I'm a proud season ticket holder of the 49ers, and I just want the value of my tickets and my PSL to go up. So hopefully you guys enjoyed the weekend, and I'll see you again next week. Good luck with your investments.